What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about SoFi Technologies, who reported earnings just a few weeks back. And what I wanted to do in this video is I wanted to go over their earnings announcement and really dive into the numbers and give my opinions on what those numbers mean for the company moving forward. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. Let's start off by taking a look at SoFi's stock chart. If you just look at the chart, you would think that they reported terrible earnings. They came out with their earnings announcement on Monday, July 31st, and the stock ran all the way up to $11.45. However, since then, it has ran down almost 30% to where it is sitting at now of $8.29. However, keep in mind, year to date, the stock price is up almost 85%. The stock started the year trading around $4.50. It ran up slightly into February, but then traded back down into the $5 range. But from there, at the end of May to the middle of June, the stock traded up almost 80% and has really traded sideways from the middle of June to where we are sitting at now in August. In my opinion, I think we're starting to see investors moving their money around within the market. If we look at IWM, we can kind of see that there's been multiple time periods where this indice has ran up a fairly significant amount in a very short period of time. And what I think is going on here is investors are looking at some of these small cap stocks, how much they have gone up in the course of this year, some of them 70, 80, 90%, and they're starting to take profits and either move that money to the sidelines or rotating it into larger cap companies. And if we jump over and look at the S&P 500, which is going to have a lot of those larger cap companies in it, we can see that it has a very different trend than IWM. It ran up as well in February, however, basically traded sideways throughout the spring months and then did see a similar run up from May into June/July time periods, but it's seeing just a very slight pullback now, where we could see in IWM and a lot of these smaller cap companies, we're seeing 20-30% drops in a lot of them. And a lot of these drops are even coming on the back of very positive earnings announcements. For SoFi, we could see again, they reported their earnings on July 31st. It was expected that they would report -7 cents in EPS. They actually came in and reported -6 cents in EPS. Revenue was expected at $473 million. However, they reported $488.8 million, which was a 3% beat on revenue. And on the back of this earnings announcement, we've seen some analysts actually increase their price targets for SoFi. In this case, we see Piper Sandler actually increase their price target from $8 to $9. In the long term, price targets don't mean a whole lot for the company, but they are important when looking at traders. A lot of traders will look at this and really invest based off of it. And what we saw from Nvidia today kind of speaks to that. They moved up 8.5% in a single trading day on news that some analysts had increased their price targets. And keep in mind, for SoFi, we were looking just a few months ago at price targets anywhere from $2.50 to $3. And now these analysts are gradually warming up to the company and increasing their price targets in a significant way. Now let's go ahead and jump into their numbers, and we'll start with their GAAP numbers. When we look at their net revenue, it is up to $498 million. And that is up from $362 million, which is a 37% increase year over year. We also saw their net loss drop in a massive way. In 2022, they had a net loss of $95 million. However, now it is down to $47.5 million, which is a 50% reduction in loss. This is also translated over well to their loss per share. We can see that their diluted loss per share is sitting at 6 cents of negative EPS, and this compares to -12 cents of EPS in 2022. The main metric for this quarter, I believe, is their revenue. That is overall very positive to see them still growing in the 30% range. That is a massive number. We have seen companies like Palantir fall off in terms of their revenue growth. However, SoFi has continued to have very high revenue growth, and that is very positive moving forward. And also to see that they have decreased their losses per share by 50% is also a massive catalyst and could continue to be a massive catalyst in the back half of this year. And how they're achieving such great growth is because of their growth in members. We can see that in Q2 of 2022, they had 4.3 million members, and they have grown that all the way to 6.2 million members in Q2 of 2023. This is another metric that is very important to see growth in. In terms of members, we want to see that number going up at a very quick rate and continue to grow very significantly, because SoFi right now is still in its growth stage. We want to see members quarters going up consistently by 10, 20, 30%, and that is what is going to lead to top line and bottom line growth for this company. We've also seen some interesting growth numbers from their loans section. We can see that personal loans year over year grew 51%, student loans were down 1%, and home loans were down 27%. So obviously growth of 51% is massive in terms of their personal loans. However, what's more interesting to me in this section is their student loans being down only 1%. Over the next couple of quarters, we could start seeing interest rates falling and students being forced to repay some of their debt. And what that could mean is a big opportunity for SoFi to be in a position for students to refinance to their platforms. And that could equate to large revenue growth as well as EPS growth and potentially a lot of growth in terms of their student loans in general. I think we could see that number a year from now anywhere up maybe 10 to 20 or even 30% year over year. And along the same lines, we're seeing their home loans down 27%. And obviously there is a tough interest rate environment right now. We are seeing interest rates anywhere from 7 to even 8%. And if over the next 2 to 3 quarters, we see interest rates begin to fall, we could start seeing some people refinancing their debt and their mortgages to a company like SoFi. And that could help them also get back to growth in terms of their home loan business. SoFi also provided very positive guidance moving forward. They project that revenue growth over the next 2 quarters will come in anywhere from 20 to 25% year over year. But the bigger announcement was that SoFi expects to hit net income profitability in the 4th quarter. And this is very interesting that they are projecting to hit profitability in the 4th quarter, because when we actually look at analyst numbers, it doesn't appear that they have the same projections. So we can see for the current quarter, they're estimating around -7 cents in EPS. They have a low estimate of -10 cents, and then they have a high estimate of 0 cents. However, if we look at next quarter, the average estimate is -1 cent. The low estimate is -9 cents, and then the high estimate is just 1 cent of positive EPS. However, if they're projecting to get to net GAAP profitability, what I would expect to see is that analysts would have higher price targets for the 4th quarter. However, they are sitting right now relatively low compared to what SoFi themselves are projecting. This offers a good opportunity for SoFi to come in with a solid beat for the 4th quarter. And if we look at the current year, we can see that analysts have an average estimate of -24 cents, a low estimate of -70 cents, and a high estimate of -15 cents. However, if we look at next year, the average estimate gets to profitability at +2 cents of EPS. The low estimate is still negative at -16 cents of EPS, and the high estimate comes in at +12 cents of EPS. Overall, I do own SoFi shares. I like the company. I think they're going through a little bit of a rough time over the last month or so, just because of rotations of money in the market. I don't think it has anything to do with the earnings. I think a lot of investors were trading on the earnings and the fact that they were expecting the Fed to really start lowering interest rates, and they haven't seen that so far, but I do expect that to happen here either on the back half of this year or early next year. And I think that could have a big impact on SoFi's loan business and their overall business moving forward. And especially if they're able to get to profitability in the 4th quarter, I think that will set them up for a very good year in 2024. Keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.